This is a new year, and most companies are going to be publishing their full year 2022 results. And despite the macroeconomic headwinds last year, most companies they actually did well. As I'm talking about the listed companies now.
Okay.
They did well, and because of that, investors are anticipating, positive earnings results and also dividend declaration. And this also coupled with the fact that more recently, because of the high system liquidity, fixed income instruments have offered low returns, compared to what we saw at the maybe second half of last year. So yields are very low now. T-bills at the longest end, about 364 days, is doing around 2%. So investors are like, why should I put my money in maybe T-bills or maybe fixed deposit when the yield is actually not attractive? Then for you to even get something decent for fixed deposit, you need to have enough money. So what is happening now is that most investors are willing to take that risk of taking position in equities ahead of the positive earnings releases and the dividend declaration. So that.
And then we see buying interest in MTN shares and Seplat looking good, and this in itself also impacted on the market. How would you react to this?
Yeah, so MTN, Seplat, they have been doing very well last year. If you recall that for Seplat, after they suffered from the impact of COVID-19 in 2020 and slightly 2021, we are seeing oil price continue to improve. For most of last year, because of the Russia-Ukraine war, which disrupted supply of oil. So price of oil are going very high, because demand is remaining strong, but supply has been capped by the sanctioning of Russia, inability of Russia to supply oil as it used to. So prices for oil are going significantly higher, and this is of course positive for a company like Seplat, which deals in oil and gas, which oil accounts for most of its revenue. So it's generally expected that Seplat is going to do well on the back of this, given the fact that it's largely dependent on the performance of the company is largely dependent on the price of oil and gas. So that is expected to buoy positive full year results for Seplat, So that's what actually is driving that interest in that Seplat. Then for MTN has always been very resilient, even during the pandemic, they were still able to make a lot of money. And looking at even their 9-month results, performance has been very good. And MTN, is a company that has a very good long-term value. If you look at the payment service bank license that they got from the central bank, coupled with the fact that they have been able to grow their user base. So, MTN is a very good long-term stock, and people are like, taking position in these stocks. Again, for MTN, another thing that could be driving interest in MTN is the fact that the stock is, since it's listed at around 90 naira, the stock has continued to witness growth. So it's very resilient. Even if macroeconomic wind is expected, if you put your money in, most investors put their money in MTN with confidence that in the long term, they are going to see that, value in the stock. Also, in the short term, they have been delivering very good numbers. So this is what actually drove interest for both MTN and Seplat.
And so in the week ahead, what do we expect?
For the week ahead, it's going to be a bit, it's a mixed expectation. On one hand, you would expect that with full year results expected to be released more by next week, so most investors will be anticipating positive declarations, dividend declaration. So that would drive interest, a sustained interest in the equities market.
Okay.
On the other, another thing that would support that would be the fact that fixed income yields are expected to remain low for most part of the first quarter. So investors will prefer, take a position in getting maybe attractive dividend yields of 10%, 15%, depending on the stock you're buying. So most investors will be looking at that ahead of fixed income instruments. However, on the flip side, another thing that investors will be worried about will be the fact that election is coming, Election is coming in. How will people react to it? Again, fixed income instrument are expected to see improvement in yield, maybe if, beginning from the second quarter. So some investors may be trying to maintain a risk of appetite. So for those that are currently in the equity market, they may be looking at taking profit by selling what they are holding and then putting their money in less volatile instruments. So I mean, it's very difficult to project, what will happen next week. But it's just going to be mixed sentiment. Whichever one outweighs the other. For instance, if investors are still positive and they're still confident that maybe nothing much will change in terms of election and election fares are very low, then we should see some buying interest,
What would
in
what
the equities market.
Okay, so what would be the advice for investors?
For my own type of investor, I would prefer to take profits and then put my money in less risky or less volatile instruments. And then once I'm able to gauge the market direction, then I can start to now take position. Because by the second quarter, when you start to improve in the fixed income market, investors are likely going to be selling off on equities. So we are going to have a lot of opportunities. And you can take longer term position. You have more upside potential. So I mean, if you consider the fact that most stocks will be marked down for dividend, so why don't you just take your profit now and exit? So for an investor like me, I'd rather exit the market now and then wait for fixed income yields to rise, then more sell-offs in equities, and then reposition in equities for a longer term.
Thank you very much.